Hello, you sexy sat stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. It has been another exciting week here on the sunny Space Coast of Central Florida. Last week, we were talking about all-time high after all-time high, and in fact, Bitcoin briefly topped out just under 100K, peaking at $99,849 on Thursday, depending on where you get your data. Of course, the beginning of this week, we saw the price retrace with some perma-bears calling for further declines into the 80s or even lower, with a resurgence of the 58K gang even. And while price is certainly exciting, there is a lot of actual news to discuss this week as well. We will get into all of that and, of course, make our weekly DCA stack all up ahead on today's episode of the Bitcoin Bulletin Podcast. This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Guten Tag, buenos dias, Morian, and welcome to episode 190 of the Bitcoin Bulletin Podcast. Tomorrow is Thanksgiving here in the United States, and if you had been planning on walking into your family gathering to thunderous applause whilst dishing out a smattering of "I told you so's," only to feel like you lost the big game in the final seconds with the sudden price pullback, well, do not despair. Bitcoin is once again within easy striking distance of fulfilling all the predictions of it hitting 100,000 US dollars before the end of the year. All humor aside, though, it is hard not to focus on price when we are in the middle of a bull run. And I promise I will do my best not to obsess about price this episode, because there is certainly a lot to talk about besides price today. But as usual, before we get the ball rolling, let's take that customary look at Bitcoin's vital statistics. At the time of recording, we are sitting at a block height of 872,266, and Bitcoin is clocking in at a US dollar value of $96,080. That means that every US dollar that we convert into Satoshis will score us 1,041 sats. And that is going to be the most expensive that we have ever stacked here on the Bitcoin Bulletin Podcast during our DCA Wednesday series, ever, for that matter. So for those of you lamenting the price, we are officially at a Bitcoin Bulletin Podcast all-time high as I make this recording. Bitcoin's current price means it has a market capitalization of $190 trillion, up from last week's record-setting $1.88 trillion. And that is just amazing, considering it wasn't that long ago when I was talking about the importance of breaking that $1 trillion mark for the normies out there because of human psychology and round numbers, etc. And here we are closing in on $2 trillion. I mean, it's still $100 billion away, but last DCA Wednesday, we saw the market cap of Bitcoin increase by $100 billion just in that week alone. So before you know it, we're going to be talking about more than a $2 trillion market cap if things keep going. For those of you who value your wealth in shiny yellow rocks, it will currently cost you 36.4 ounces of gold to purchase just one Bitcoin. That is more than a half an ounce more than last week, when it would have cost you 35.7 ounces of the shiny Peter Schiff bucks to purchase a single Bitcoin. As they say, you get Bitcoin at the price you deserve. And if you're Peter Schiff, as gold trends down to zero in Bitcoin terms, that means now it's going to cost you more than 2 full pounds of Bitcoin to purchase more than 2 full pounds of gold to purchase just one Bitcoin. Significantly more so as the price of Bitcoin goes up, and while the price of gold is down from its recent all-time highs as well. So it's a double whammy for you gold bugs out there this week. For those of you who value your wealth in pizza, one Bitcoin will purchase you 5,373 large pepperoni pizzas from Papa John's. That works out to a pizza every day for more than 14 and a half years. almost 14 3/4 years. And of course, as you know, I've made the hypothesis, I postulated many times on this podcast, that if you were a whole coiner and you decided you were going to try and spend a whole Bitcoin and you were going to try and do so by purchasing just one pizza a day, that you would never be able to spend the entirety of that Bitcoin on pizza. Not in a single lifetime, not in multiple human lifetimes, because think about it, 14.7 years from now is 3 full halving cycles into the future. And we haven't even seen where Bitcoin's going to go this halving cycle. So as the price of Bitcoin goes up, the number of pizzas that you can purchase for one Bitcoin trends towards infinity. And that is certainly impressive when you consider that, it was in 2010, so 14 years ago, coming up on the 15th anniversary of Pizza Day this spring, that Laszlo Hanya made that first real-world purchase when he bought 2 Papa John's pizzas, and he paid a whopping 10,000 Bitcoin for those pizzas. So thank you for that sacrifice, Laszlo. And if you remember the episode I do every year on Bitcoin Pizza Day, Laszlo is not hurting. I'm sure he's still doing just fine. And as he says, who knows where Bitcoin would be if it hadn't been for that first purchase and for people like Laszlo. That metric that you know has been my favorite from most of this podcast, Bitcoin's 24-hour average transaction rate, is humming right along. Currently, we're looking at an average of 5.51 transactions per second on chain, down a little bit from when we were screaming along last week at 8.18 transactions per second. I have this hypothesis that when the transaction rate is booming, that the price is booming, and when the transaction rate is tapering off, the price is tapering off as well. I went into that in a little more detail last DCA Wednesday, and I've spoken about that in quite a bit at length over the last 3.5 years. But the long and the short of it is, transactions are just humming. When we first started this podcast, it was considered a good day if there were more than 3.14 transactions per second. I remember that number because that's like pi. So basically, if we were at pi, that there was healthy activity on chain. And then that metric got skewed a little bit with all the spam that we saw after Taproot with the ordinals and inscriptions and the BRC20 tokens. And so we've seen, pushing 9 transactions per second on chain, where previously 4 would have just been amazing on-chain activity. And speaking of on-chain activity, we did have a price pullback, and during that price pullback, the transaction activity on chain went down quite a bit as well. And during that time, the mempools cleared out a bit. Clark Moody's dashboard's mempool looks like it's cleared out by about 50%. Last week, there were 197,768 transactions pending in his mempool. Right now, there's only 87,126 transactions. And that's the first time we've seen it below 100,000 transactions since like the beginning of October or so. It's been, the mempools have been just chock full for the last 6 months or so at least. Mempool.space has a slightly larger mempool, and as usual, they tell a slightly different story. That is why it's always good to get your data from a variety of sources instead of just relying on one source. Even so, Mempool.space's mempools down about 25% from last week. Currently, there are 248,933 transactions in their mempool, so down a bit, but still a lot of transactions pending in that mempool. Of course, as Matt Odell likes to say, there's no such thing as the mempool. I take a little bit of exception to that because I think that the mempool is like, the universe. There's many little worlds within the universe or whatever, but and your little world or your little mempool is your snapshot in time, but it's a snapshot in time that you're looking from your location into the universe in general. And so, that's really semantics. The point being, that when we talk about the mempool, we're talking about the pool of transactions pending to be confirmed or mined into a block. And there's each node, the way the Bitcoin network propagates out, sees transactions in a different order, depending on how they're, depending on how they're propagated out amongst the web created by all the nodes out there around the world. And so it makes sense that some of them are going to be a little different than others. In addition, you can set your mempool to run your custom set of rules. There's a maximum amount of size that you can allocate towards your mempool. And above and beyond that, it just won't accept any more transactions, or it'll start purging the lower fee transactions out of your mempool, or however you have your mempool configured. Most people, I would imagine, since most plebs, most normies out there are probably running, the Raspberry Blitzes or Umbrals, that, they just run their mempool set at the defaults. But I'm getting way off on a tangent here. The point being, as with all data, there are different sources for getting that data, and they tell slightly different stories. So it's important to look at that big picture instead of just focusing on like Clark Moody's dashboard, for example, because sometimes it's useful to see what's going on in that larger mempool that mempool.space has going, or there might just be a glitch in Clark Moody's dashboard. So you want to have, regardless of what data you're looking at, you want to have a wide variety of sources so that you have the best picture and you can make the best, most informed decisions. And speaking of mempools and on-chain activity, if you need to send an on-chain transaction, Clark Moody's dashboard's fee estimator is saying it got quite a bit cheaper than it was recommending last Wednesday. Last Wednesday, fees had spiked all the way up to 36 sats per VByte for a high priority transaction. And right now, high priority transaction, they're recommending just 9 sats per VByte. And they're saying that a fee of just 2 sats per VByte will be mined within a day. And of course, they've been stuck at 2 sats per VByte as their minimum recommendation for literally months. Mempool.space's fee estimator is slightly different. They're saying that a high priority transaction will be mined with a fee of just 6 sats per VByte, down from 31 sats per VByte last week. That means instead of costing $4 for a transaction, more than $4, it will cost you just 81 cents US dollar equivalent for a high priority transaction. They're recommending that if you have a medium priority transaction or a low priority transaction, that you still include a fee of 5 sats per VByte. And also they're recommending that the lowest fee you should set for a no priority transaction is 2 sats per VByte as well. Plebs, I am testing out a new microphone. I have always been using a fairly nice microphone. I have a variety of mics. I have a travel mic I use, which is it's a USB mic. I could just plug into my laptop. Then when I'm here in the studio, I've got a nice soundboard, and I have an XLR microphone on a boom arm. It's set up just like you would expect a studio to be set up. And it was a decent microphone, but it was maybe like $100 microphone, which is, expensive. And what I was just getting into, I just had an issue occur. So I treated myself on Amazon.com, was running their Black Friday specials. And one of their specials was on a really nice Shure microphone, a couple $100 microphone. And so I thought it was like 40% off on their Black Friday special. So I figured I'd upgrade my microphone. This is the first time I'm using it. And it has like a built-in voice isolation technology. And I don't know if I've got my soundboard configured to where the inputs are maybe so much that it's overloading the mic, or what the story is. But every once in a while, I'll get a pop and a brief drop off, a brief cutout while I'm recording. And it did it when I was doing my audio check. I thought maybe it was related to me maybe bumping cables or something, but it just did it again a minute ago. It did it in between words, so hopefully it didn't cut me off. But I'm going to go back and play this audio back after I'm done recording, providing I have enough time to get it uploaded before I flat out run out of day, before I run out of DCA Wednesday. But bear with me if there's any pops or drop-offs. It's probably this new microphone, which is moderately disappointing because I was expecting this microphone to just be amazing. And I think listening in the headphones I'm listening to right now, that the audio quality in general is pretty good. It's just like it's got some built-in noise canceling that it either drops or something. I guess maybe I'll sort that out. But again, I'm getting distracted. Back to the vital statistics. Since last DCA Wednesday, we've gotten a little closer to the next Bitcoin mining difficulty adjustment. We are now 662 blocks away. Last DCA Wednesday, it was more like 1,662 blocks to go, or something along those lines. And as a result, since we had just had a difficulty adjustment, the estimates of what the next mining difficulty adjustment was going to be were all over the place. And that's one of the beauties about the Bitcoin core protocol, is that it adjusts the difficulty that it takes to find the next block every 2016 blocks, which theoretically works out to about once every 2 weeks, with the goal of having blocks come in at an average block time of once every 10 minutes. The reason why it's better to have 2016 blocks as opposed to just a couple hundred blocks is because blocks are found basically random. It's basically random chance. It's a lot like flipping a quarter. If you flip a quarter 5 times, it's possible you could get heads 5 times in a row. But if you take a large enough sample size, like 2016, and you flip that quarter 2016 times, the law of averages says it should work out to 1,008 heads, 1,008 tails. And so that's why, as we get closer to the difficulty adjustment, the estimates are getting a lot more reasonable. Last Wednesday, it was looking like it was going to be anywhere between a 1 and a 14% increase in the difficulty that it takes to find the next block. Now, the two sources I'm looking at are pretty close to an agreement. One says it will be 2.34% increase. The other says we're going to be looking at a difficulty increase of 2.7%. And that is because blocks are currently averaging 9 minutes and 44 seconds. Obviously, that's a little faster than once every 10 minutes. So that means it'll get a little bit more difficult to mine blocks going forward on approximately December 2nd. So about a little more than 4 days, 4 days from now. And really, that's only really important if you're a miner, because as I said, the blocks come in on once every 10 minutes on average. But, just last night I saw a block that was 36 or 37 minutes, and then another block that came in under 2 minutes. And that's just the way it is. It's like I said, it's a flip of the coin. And if you have an on-chain transaction that's really important to you, you're sweating bullets waiting to see if it confirms, it could be almost instantaneous. It could take, up to an hour or more. It just depends. So really, if you're a pleb, that doesn't make much difference. The mining difficulty adjustment makes very little difference to you. It is, however, an indication of how healthy the mining ecosystem is and just how secure the Bitcoin network is. And that is because the more computing power that's dedicated to securing the blockchain, the harder it would be. The next to impossible, the increasing impossibility it would be that anybody could ever roll that blockchain back. Currently, there are 690 exahashes securing the Bitcoin network. That's an estimate, of course. That's up almost 7 exahash from last DCA Wednesday. So just like the price of Bitcoin is going up and to the right, the network security of the Bitcoin network is going up to the right as well. And that is not only impressive, that is necessary. As if we ever get to the point where we do see hyper Bitcoinization, it would be really, really, really important that it's impossible to attack Bitcoin. I think we passed that mark years ago, but you never know how, what new advances in computing will come along. But it seems logical that any advances in computing hash power that might be used to try and crack or hack into Bitcoin would also find their way into the mining ecosystem too. So not something that I'm worried about in the slightest bit. It's just really cool to see how much computing power is dedicated to securing the network. Before I continue, I want to take a minute to thank those of you listening on your favorite Podcasting 2.0 apps, such as Fountain. Podcasting 2.0 allows you to support this podcast through the value for value method by either streaming sats on a minute-by-minute basis as you listen, or by sending a boost, which is a shout-out via a Lightning transaction where you can let us know what you think about the podcast, let us know what's going on in your community, or even just say hello. But because it's a Lightning transaction, you are sending value back in the form of Satoshis. But the really cool thing about Podcasting 2.0 apps such as Fountain is on Fountain, you can actually even earn sats for listening to your favorite podcasts. So why wouldn't you listen on Fountain instead of one of the big tech apps? You don't want to use Facebook and you're not a big fan of Google or Amazon. Why would you listen on one of the big tech apps? Real quick, we've had another big change up in our geographic distribution of listeners. Last year, Singapore had surged to the number 4 spot, and they've continued to move up the charts as well this week. Our top 10 countries for listenership are as follows. Number 1 remains the United States, where a little more than half of you are listening. But number 2 now is Singapore. Singapore has surged from the number 4 spot to the number 2 spot in just a week. That is really impressive. So hello and thank you to all the new listeners listening in Singapore. We have had a lot of new listeners. Our podcast stats in general have been going up, which is not unusual during a bull run. Our listenership went up during the last cycle bull run and then tapered off a bit during the crypto winter, the bear market, the Bitcoin crab market. I know I've heard other podcasters lamenting about that as well. Daniel Prince, for example, mentioned that his listens had dropped off by 60% in the bull run, or in the bear market. So when the bull run kicks off and Bitcoin gets more exciting, we get more listeners. And some of you, at least a significant portion of you, apparently are from Singapore. So hello, welcome aboard. Thank you. Apa kabar to those of you listening in Singapore. Number 3 now is Argentina. That drops out of the number 2 spot for the first time in probably years. I don't think we lost any listeners in Argentina. We just picked up that many listens from Singapore. So muchas gracias, amigos, in Argentina for remaining solidly in the top 10 countries, number 3 currently. Number 4 now is Germany, dropping from number 3 to number 4. So Dankeschön, mein friends in Deutschland. Number 5 is Luxembourg. They actually moved up a spot from number 6 to number 5. So again, Dankeschön, mein friends in Luxembourg, or Morien to those of you who speak Luxembourgish. Canada drops down from number 5 to number 6 this week. We did see a decline in listens from Canada as well. It was a very small change in listenership, about a 1% change, but enough to move it down from number 5 to number 6. So hello to those of you listening in the frozen white north, and thank you for listening to the Bitcoin Bulletin Podcast in numbers significant enough to remain in the top 10. Number 7 remains the United Kingdom, so hello and thank you to our cousins across the pond in the United Kingdom. Number 8 remains Spain, so hola, muchas gracias amigos in Spain. Number 9 remains Mexico, again, hola, muchas gracias amigos in Mexico. And number 10 remains Colombia. Once again, hola, muchas gracias amigos in Colombia. And hello and thank you to everyone listening, regardless of where you're listening from. Like I said, we do have a bunch of new listeners tuning into the podcast. If your country is not in the top 10, perhaps you can help orange pill a friend or family member by turning them onto this podcast. And if they're in the same country you are in, maybe that will help boost your country into the top 10. We do have listeners all over the world. For example, Australia is hovering just at number 11, where they've been for the last several weeks. I don't think it would take too many listeners in Australia to punch you guys back into the top 10. And there are several other countries that are really, really close to breaking into the top 10 as well. But once again, thank you to everybody listening, regardless of where you're listening from. It is really super flattering to know that we have listeners all over the world. I can't tell you that how humbling that is. That is just really awesome. So thank you from the bottom of my heart. On to the news. As usual, the price of Bitcoin is what is dominating the news, at least on Bitcoin Twitter or Bitcoin X. Along those lines, did you spend at least one sleepless night last week patiently waiting to celebrate Bitcoin breaking 100K? I know I was up all night for at least 2 nights in a row as Bitcoin kept flirting with that $100,000 mark. Lena Sichet captured that feeling with one of her littlest hodler cartoons. She posted this a couple days ago now, and it was her littlest hodler looking at the Bitcoin chart. It says 99,000. Then it says 99,500. And the Bitcoiners getting littlest hodlers get a little more excited. Then it's 99,600, and the littlest hodler has both hands on its chin, getting really excited. And then it hits 97,600. And the littlest hodler has the expression on his face like, oh, like the wind has just been let out of his sails. Lena, the littlest hodler cartoon, is always puts things into a unique perspective that I find entertaining, if nothing else. Many people were blaming Bitcoin's retracement on the inverse Kramer. Zero Hedge tweeted 2 days ago now, or 1 day ago, just yesterday, Bitcoin is up 450% since Kramer said Bitcoin is phony and a scam. It is down 6%, said Kramer said Bitcoin is a winner. As you know, on Mad Money yesterday, or I guess a couple of days ago now, Kramer came out seemingly endorsing Bitcoin when talking about the ETFs and MicroStrategy or whatever. Simply saying Bitcoin is a winner, and that apparently is enough, because if you're familiar with the inverse Kramer, literally almost everything Jim Cramer endorses crashes. In all fairness, though, I do want to remind you once again, the Bitcoin has had 5 to 7 major pullbacks during each halving bull run. Maybe this time is going to be different, but if this is as bad as it gets, it would be highly unusual. This was less than a 10% correction, and a major correction would be more like 30% or more. So far what we had was more of a consolidation than a correction. And of course, in the last several hours, Bitcoin's price has recovered to where it looks like it's close to making a run at 100,000 again, that maybe we'll get that wish and it will do it for Thanksgiving. Although there seems to be that Thanksgiving curse, kind of like there is that Bitcoin conference curse where, Bitcoin doesn't explode in value on those days when we're celebrating. But those dips or those consolidations, whether they happen or not, are an opportunity. Just because we DCA on this podcast doesn't mean that you can't also scoop up some cheap Satoshis. If we do have one of those big pullbacks. It was Adam Back put this all into perspective all the way back in 2020. So it's been almost 4 years ago. fact, it'll be 4 years today, tomorrow, when Adam Back tweeted, "Dips exist to transfer Bitcoin from weak hands to stronger hands." You should know that Adam Back, who is at Adam3US on Twitter or X, is an OG. There's a case to be made that he is perhaps Satoshi. The white paper leans and cites Adam Back's research quite heavily on Adam Back's previous work in the cryptography space. And he's definitely an OG, someone that you should pay attention to. And that is certainly sage advice from one of the original Bitcoin original gangsters, Adam Back. Also, to put the price in perspective a little bit, speaking of anniversaries, 11 years ago today, Wired Magazine published an article where they were celebrating Bitcoin hitting the milestone of just $1,000 with the headline on November 27th, 2013, "The magic number, Bitcoin prices to top $1,000. The value of Bitcoin has topped $1,000 a mere 11 months after the fledgling digital currency was worth a little more than a $10 bill." Another pop fortuitously timed for a pause. So I don't know if that made an audible pop that you could hear or if it was just a drop off or a pop that I heard in my headphones, but I have touched nothing. I'm sitting back in my chair. I'm 6 or 7 inches away from the microphone, doing everything as usual. So I'm wondering if I'm having a problem with my setup or if it's this new mic. I'm getting kind of disappointed because I was super excited to try out this new mic. This is a professional podcast mic. If you saw video of this podcast, you would notice it looks exactly like the microphone that a lot of the big podcasts are using, because it is exactly the microphone that most of the big podcasts use. And, they say if you have a chair, you're short Bitcoin. And if you're a podcaster and if you have a nice mic, you're short Bitcoin. So this was a splurge for me. Yeah, it was probably sats I could have rolled. It was dollars I could have rolled into Bitcoin, but it was a Black Friday deal. So I splurged, and now I'm having a little bit of buyer's remorse here. I'll play around with a little more, but I got to get this podcast uploaded. So you're just going to have to tolerate it. Hopefully it doesn't get too annoying. Hopefully it's annoying me by hearing these loud pops in my headphones more so than it's actually impacting the audio quality of this podcast. All right, back to what I was talking about. Two things normies are seemingly constantly fixated on recently, besides the price, are inflation and interest rates. And this afternoon, we got a little bit of insight into both. With the headline on Yahoo Finance, "Stocks slide after key inflation gauge shows faltering progress." Investors digested fresh data that showed inflation made little progress in October towards the Fed's 2% target. The article goes on, "U.S. stocks dipped Wednesday as investors digested fresh data that showed inflation made little progress toward the Fed's 2% target in October. After clinching record highs on Tuesday, the S&P 500 fell about 0.4%, while the Dow Jones Industrial Average was off about 0.3%. The tech-heavy NASDAQ Composite was down roughly 0.6%. Blah, blah, blah. The latest reading of the Federal Reserve's preferred inflation gauge showed price increases were flat in October from the prior month, raising questions over whether progress is getting to the central bank's 2% goal, or whether progress in getting to the central bank's 2% goal has stalled. The Core Personal Consumption Expenditures Index, PCE, which strips out food and energy costs, is closely watched by the central bank. Rose 0.3% from the prior month during October, in line with Wall Street's expectations for 0.3%, and the reading from September. Over the prior years, core prices rose 2.8%, in line with Wall Street's expectations, but above the 2.7% seen in September. I'm going to interrupt a little bit here. United noticed that 2.8 is higher than 2.7. I don't call that flat. I call that an increase, but hey, downplay it however you want, media, right? Article continues, traders currently see a roughly 34% chance the Fed holds rates steady at that meeting, up from 24% a month before. Also out Wednesday, the second estimate of third quarter GDP was unchanged, showing the U.S. economy grew at an annualized rate of 2.8% in that period. What an unbelievable coincidence. GDP increased at the exact same percent as inflation. Weird. So we had 2% economic growth, but there's 2.8% economic growth, but there's 2.8% more money out there. The money's 2.8% more worthless. You have to spend 2.8% more to purchase the same goods and services you did a year ago. So that's a wash, right? There's your robust 2.8% economic growth for you. It was 100% made up of inflation. Obviously, the official inflation numbers are simply propaganda. We all know that, as Milton Friedman said, quote, inflation is always and everywhere a monetary phenomenon in the sense that it is and can be produced only by a more rapid increase in the quantity of money than in output, end quote. So basically, inflation is a monetary phenomenon. Things are not getting more expensive. Your fiat is getting less valuable. They print more of it. When there's more money chasing after the same number of goods, the price of those goods in that money goes up because, your money's worth less. So it's going to take more of it to make those purchases. Now, remember, money is an expression of human life, of your time here on Earth. You trade hours of your life for paper, basically, that they print out of thin air. When they print new money and they are decreasing the value of the money already in existence, what we experience is inflation, they are decreasing the value of your savings via this inflation. It is stealing that time that you put in the bottle to save for the future. At just 2%, which is the quote unquote stated goal of the Fed, the value of your savings is cut in half every 36 years. Half of the hours of your life that you dedicated to saving for the future, to making a better future, is stolen from you if the Fed achieves their stated goal of just 2% inflation. And of course, we all know inflation is actually far worse than what they will admit to. So that rate of theft is actually vastly greater, and the years of your life are being stolen even faster. I'm spacing on the website out there, but there's a website out there that shows you that if they hadn't been monkeying with the inflation metric, with the way they calculate inflation by making hedonic adjustments, by making substitutions, or by claiming that things got cheaper because even though they're more expensive, they're better, and therefore that makes up for it. If you use the same metric that they used in 1980 to gauge inflation, it's up somewhere in the teens, like 15 or 16%. And even that was a metric that was put together to give the rosiest possible picture. So we all know, as Mark Twain said, that there are three types of lies, damn lies, and statistics. And government statistics, I think, is what he had in mind. They're certainly the most vile form of the lie. Nonetheless, the gaslighting continues. You might be familiar with Frank Luntz from Fox News. He's that neocon pollster with the dials that has a group of people in a room watching debates and things. They've got a dial in their hand and they turn that dial up or down depending on how they're reacting. Anyway, he's a never Trumper and he's a neocon, fairly notorious, and apparently he's carrying water for the status quo because he tweeted 2 days ago now, the average cost of Thanksgiving dinner estimated at $58.08 for a 10-person gathering has dropped 5% since last year, the lowest since 2021. What a load of bullshit. If you went to the grocery store just to buy a meal for a normal family of four, you would know that it's going to cost you significantly more than $58.08 oftentimes. And he's saying that you can invite 9 of your family members over, a 10-person gathering for just $58.08. I did my Thanksgiving shopping late, and I already had the potatoes, and I already had the stuffing stuff, and I already had all the garnish, pickles, olives, things like that. So all I bought was the turkey and one or two other things, and I spent $80, and I already had over half of what I was gonna cook for Thanksgiving already at home in the fridge or in the freezer, and that is just for a family of 4. I bought a small turkey because I'm going to put it in the smoker, and I didn't want to spend 24 hours smoking a turkey. So I bought the second smallest turkey they had. I was going to get the absolute smallest one they had. I thought I want just a little bit more meat because I don't want people to go hungry. And so that's just infuriating to see a post like that from somebody as out of touch with reality as Frank Luntz. And you remember I was kvetching about this last year. I think it was just last year when the Biden administration had tweeted that it was the cheapest Thanksgiving on record. That things are so great. Back when they were trying to gaslight us that there was not going to be inflation. And then they said, well, the inflation was under control. It was transitory. And then, the inflation is actually good because it's stimulating the economy or whatever horse shit they were saying. But I remember foaming at the mouth over the tweet that it was the cheapest Thanksgiving of all time, the cheapest Thanksgiving in history. And now they're trying to say it's even 5% cheaper than last year through a surrogate like Frank Luntz. It wasn't the White House saying it this time. But for those of you who go out and do your grocery shopping on a daily or weekly basis, they're full of crap. One of the reasons why the landslide election happened the way it did, that it wasn't even close, was because they can't lie about things that touch you in the pocketbook. They can lie about a lot of things. The media can try and convince you that, the sky is really orange or the sky is really purple when it's, blue, or when it's nighttime out, they can say it's bright and sunny. And, if you're in an office, you don't have a window, maybe you're like, oh, well, that's interesting scientific phenomenon. Too bad I missed it, but it must be true because the media said it. But they can't convince you that you didn't spend the money that you spent when you went to Publix or went to Safeway or went to Aldi. They can't convince you that when you went to go buy dinner, you had to choose a less expensive alternative because you couldn't afford to purchase what you usually purchase. The meal that you're used to fixing your family every day is all of a sudden unattainable for the average American in many cases. And to come out and just throw it in our faces that things are so cheap right now, you're going to spend 5% less this year than you did last year is just assholic, especially when even the government is admitting that inflation is currently 2.8%. That means even if you buy that number, it should be 2.8% more expensive than last year, not 5% cheaper. But that's enough of that rant. And speaking of Thanksgiving, and I spoke about this a little bit in the intro, Thanksgiving is a time when we are typically surrounded by our normie family members. As such, it is stereotypically a time for awkward family conversations, a time to argue about politics, and the things that make us all unique and different from one another. This year, it also coincides with the Bitcoin bull run. The bull run, however, is my least favorite time to try and orange pill normies, particularly good friends and family members. At some point in the bull run, we would expect the price of Bitcoin to be higher than what it's going to fall back down to during the low of the typical future bear market that follows, as part of the typical 4-year cycle, obviously no one has a crystal ball, but if history doesn't repeat, but at least rhymes, we'd expect to have a blow off top and then the price to retrace perhaps significantly. And so some of your no-coiner friends and family are inevitably going to ape in out of FOMO, and they're going to do so as the price explodes. The higher the price of Bitcoin goes, the harder it will be for them to finally buy. They weren't going to buy it at $1. They weren't going to buy it $20, $100, $1,000, $10,000. They weren't going to buy it $50,000, but some of them will buy it $150 because they'll say, okay, now it's time. When the price cools off after the blow off top, some of their buyer's remorse will come back to focus on you. They're going to feel stupid. They're going to feel conned. And if you were orange pilling them really hard at Thanksgiving, you're going to be, the whole kill the messenger thing. You're going to be the focus of that ire. Some of your family members, some of your friends may resent you. They may end up selling at a loss and miss out on the next cycle entirely and then double resent you again 4 years from now. I'm not trying to be a doomer here. I'm just saying take it easy. Exercise extreme caution. Unfortunately, the bull run FOMO convinces people to buy in that laughed at us when Bitcoin was, $50K, $20K, even $1,000 or less. It's like the meme. I think there's several variants of it, but even Lena and her little toddler has the meme where it shows a line of people lining up to buy, $100,000 Bitcoin, but nobody lining up to buy the cheap, inexpensive Bitcoin. Anyway, this is the time when I typically switch to stealth mode. I'm still the person that says, if you're interested in Bitcoin, I'll show you how to use it, but I'm not going to hard sell anybody. I'm not going to give them the elevator pitch. I'm not going to try as hard to orange pill people when the price is running. I'm going to exercise more caution. Not switching to stealth mode, though, is Rumble. The YouTube competitor announced a Bitcoin strategy, something that had been alluded to just a few days ago with an official press release on the 25th of November saying, Rumble announces Bitcoin treasury strategy. Rumble, the video sharing platform and cloud services provider, announced today that its board of directors has approved a corporate treasury diversification strategy of allocating a portion of the company's excess cash reserves to Bitcoin. This move emphasizes Rumble's belief in Bitcoin as a valuable tool for strategic planning and is designed to accelerate the company's expansion into cryptocurrency. Interesting. Accelerate their expansion into cryptocurrency. Hopefully that's alluding to maybe using Bitcoin on the network, but I digress. Back to the press release. Rumble's Bitcoin allocation strategy will include purchases at the discretion of the company of up to $20 million. So not exactly a MicroStrategy, but hey, baby steps, right? Quote, "We believe the world is still in the early stages of the adoption of Bitcoin, which has recently accelerated with the election of a crypto-friendly U.S. presidential administration and increased institutional adoption. Unlike any government-issued currency, Bitcoin is not subject to dilution through endless money printing, enabling it to be a valuable inflation hedge and an excellent addition to our treasury," said Rumble chairman and CEO Chris Pavlovsky. "We are also excited to strengthen our ties with crypto and to bolster our efforts to become the leading video and cloud services platform for the crypto community," Pavlovsky added. So that is pretty bullish, not a gigantic allotment, but again, people are watching, other countries are watching. I mentioned on previous episodes that this bull run is the bull run that's going to vindicate MicroStrategy, that's going to vindicate El Salvador. It already has, it already is. And that other companies are watching MicroStrategy and other countries are watching El Salvador, and more of them are going to, some of them will FOMO in, others will make rational decisions and get in. But the point being, other companies, other countries are going to follow the lead set by MicroStrategy and set by El Salvador. Speaking of countries, there's an article out there that indicates that Germany may be having second thoughts about Bitcoin. I remain cautiously optimistic, but Bitcoinist is running the headline, "Is Germany ready for a Bitcoin reserve? Lawmaker Kotar pushes for strategic plan." Joanna Kotar, a member of the German Bundestag and a longtime advocate of Bitcoin adoption, is pushing back against the government's recent decision to sell its Bitcoin holdings. Having witnessed the sale of approximately 50,000 confiscated Bitcoin earlier this year, Kotar is now championing the idea of establishing a strategic Bitcoin reserve for Germany. In a recent interview with Bitcoin Magazine, Kotar expressed her belief that Bitcoin would become a significant political force in Europe. She is dedicated to fostering understanding among her fellow lawmakers about the potential benefits of adopting Bitcoin. To this end, Kotar has initiated educational efforts, including the creation of a dedicated website, a newsletter, and parliamentary events featuring experts in the cryptocurrency field. Kotar noted that these initiatives have garnered interest from other parliamentary members, indicating a growing curiosity about how Bitcoin could enhance Germany's financial system. The article continues, reflecting on the German government's decision to sell its Bitcoin holdings, Kotar characterized it as a critical misstep. She previously communicated her concerns to the Minister of Finance and the Chancellor, advocating for a cohesive Bitcoin strategy rather than the liquidation of assets. Quote, "Germany needs a Bitcoin strategy," Kotar asserted, stressing that legislation should be amended to allow for the retention of confiscated Bitcoin as a national reserve rather than selling it off. Also, not in nation-state news, but this is a city. A Vancouver mayor plans to introduce Bitcoin-friendly city plans. Cointelegraph reports, Ken Sim, who has served as the mayor of Vancouver since 2022, announced plans for the Canadian city to add Bitcoin to its balance sheet as part of efforts to diversify its investments. On November 26th Vancouver City Council meeting, Mayor Sim submitted a notice of motion he intended to introduce on December 11th titled Preserving the City's Purchasing Power Through Diversification of Financial Resources, Becoming a Bitcoin-Friendly City. So again, gradually then suddenly, this is other countries, other cities in this case that have been paying attention. They see the success that El Salvador is having. They see the success that MicroStrategy is having, and they want a little piece of that pie. The good news continues with the Block reporting today. Quote, Brazilian lawmaker proposes national Bitcoin reserve to hedge economic risks. A Brazilian lawmaker has introduced a bill seeking to establish a Bitcoin reserve to diversify the nation's financial assets. On Monday, Congressman Eros Biondini introduced a bill proposing the creation of a strategic sovereign Bitcoin reserve. The proposal suggests allocating up to 5% of Brazil's approximately $372 billion international reserves to Bitcoin through a phased acquisition strategy. The bill stated that establishing a Bitcoin reserve could enhance the country's economic resilience to currency fluctuations and geopolitical uncertainties. The proposal also highlighted Bitcoin's adoption as legal tender in El Salvador, sound familiar, and the approval of spot Bitcoin exchange-traded funds in the U.S. as examples of innovative national strategies. and they referenced the spot Bitcoin ETFs in the United States. And I want to take a minute to point out to you that as of this recording, BlackRock holds approximately $31.6 billion worth of Bitcoin. And Jimmy Song pointed out on Twitter just 3 days ago, quote, "Every sat you stack is a sat that BlackRock can't get." Plebs, I've said many times, please do not sell your Bitcoin to BlackRock. Every sat that is soaked up by these strategic reserves, by Bitcoin ETFs, by companies like MicroStrategy, is a Satoshi that cannot be used by plebs as Satoshi intended, as a peer-to-peer electronic currency. I know it's exciting. I know it drives up the price. Maybe it gets us closer to hyper-Bitcoinization, but not necessarily in the terms of it being used as a currency. And that's something that I'm disappointed in. So please don't sell your Bitcoin, period. But if you're doing so, sell it at a meetup where you're selling it to another pleb. Don't dump it on the exchanges. That's just helping the rich get richer. And that's not why Bitcoin was created. Finally, in a small step towards the then you win, it was announced today that the U.S. Fifth Circuit Court of Appeals has determined that the Office of Foreign Asset Control exceeded its authority by adding Tornado Cash to its specifically designated nationals and blocked persons list, saying, quote, "We hold that Tornado Cash's immutable smart contracts, the lines of privacy-enabling software code, are not the property of a foreign national or entity, meaning 1, they cannot be blocked under the IEEPA, and 2, OFAC overstepped its congressionally defined authority," ruled the 3-panel judge at the Fifth Circuit Court of Appeals. So that is refreshing. Hopefully we'll see a lot more of that as a more Bitcoin-friendly administration takes office in January. But certainly the war on privacy was getting really heated up with the prosecution of the Samurai wallet devs, and with the prosecutions related to Tornado Cash and other privacy technologies. Of course, we all know that code is speech, at least here in the United States, and that you have the right to free speech, but that is certainly not the way things were being treated. And it is nice to see a federal court straighten things out and rule that code is speech, and that code is not a person or property of a foreign national, foreign entity, and that OFAC had overstepped the law, that it was unlawful what they did. So that is cool. All right, on to what makes today and every Wednesday special, and that is that today is DCA Wednesday. What is DCA, you might ask? Well, DCA is short for dollar cost averaging, and dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, this is going to be our 175th stack. We started stacking just $20 at a time every week on Wednesday, all the way back on July 28th, 2021. So our equal portion, we chose just $20. I wanted to keep it really simple and really relatable, a dollar figure that most people listening to this podcast should be able to relate to, should be able to come up with on a weekly basis. And of course, I chose that weekly basis because most people that I know get paid on a weekly basis. And usually when you do your investing, you do your DCAing, you do it when you get your paycheck. But again, these are you do you things. If you're Michael Saylor, you wouldn't waste your time stacking just $20 worth of Bitcoin every week. So again, this is a you do you thing, but we wanted to keep it simple. And I also wanted to show that by stacking as little as $20 a week, that we would eventually obtain a reasonable size stack of Satoshis that would make a difference in our lives one day. And I think we proved that, because in those 174 stacks, we managed to convert a total of $3,480, which is all of a sudden starting to become a reasonably large amount of money. If you're a person that $20 is a lot of money and coming up with $20 a week might be a stretch for you, $3,480 would be inconceivable. But by going slowly and steady, by not trying to time the markets, but by spending time in the markets, we've managed to now convert a stack that would have been potentially out of reach for many people listening. And we did so, by doing so, we garnered a stack of more than 10 million Satoshis, 10,153,551 Satoshis, which again, I remind you, is it's more than 10x. It's closer to 100 times more than the average person on Earth will ever be able to hope to accumulate once we do achieve hyper-Bitcoinization, when Bitcoin is being used by the majority of the world's population. There won't be more than 100,000 or 200,000 sats per person available. And we've already stacked 10 million, more than 10 million. And that is really exciting, especially since we did that at just $20 a week. So to grow that stack today, as usual, I'm going to be using Cash App. Cash App is not a sponsor of the show. I've been using them for the whole history of this podcast just because I like Cash App. I like Jack Dorsey. I like the fact it's so easy to use Cash App. They are not the cheapest method for stacking sats. Their fees are a little higher than other sources, other apps, other exchanges. But when we're purchasing a small amount, it is more of an insignificant, it doesn't add up as much. It's only going to cost us about 45 cents in fees to make this stack. But perhaps more importantly, Cash App will let me transfer that Bitcoin to my hardware wallet for free. And other services that I use, none of them will let you send your Bitcoin out for free. They all charge you a mining fee. So if it costs me $2 or $3 to send that Bitcoin out, and it costs me 45 cents 5 or 6 times in fees, we're already breaking even, or at least getting closer to what we would have saved by using a brokerage with an exchange with a lower fee. But I'm getting off track. Once again, they are not a sponsor of the show. I happen to like Cash App. They might not even be available where you're at. So again, this is also a you do you thing. You pick a service, an exchange, an app that's available and trustworthy, that is available wherever you live, that you feel comfortable with. If you are investing much, much larger amounts than $20, then the fee that Cash App charges might make a difference. All of a sudden, you might want to look for an exchange that charges a much more reduced fee. But again, I'm using Cash App, and I once again already have $20 on my Cash App because I set a market or a limit order that if Bitcoin had retraced even further over the weekend, that it was going to buy. And it didn't hit it. Bitcoin's back up. So I canceled that order and I've got that money available to invest today. So it's just simply a matter of tapping Bitcoin, tapping buy, entering $20, tapping confirm, and boom, just like that, we stacked another 20,308 Satoshis. And we did so at a price of $96,266 per Bitcoin. So that is now the most expensive we have ever stacked. That raises our total stash of Satoshis to 10,173,859. And it also unfortunately raises our average cost basis, but it only raises it to $34,401.89, which is still a heck of a good deal considering that Bitcoin's worth more than 96,000 US dollars right now. And perhaps more importantly, if Bitcoin breaks $100,000 in the next few hours or days or by the end of the year, that $3,500 now that we've converted into Satoshis will have a US dollar value of $10,173.85, which is significantly more than $3,500. Of course, that's not why we're doing it. We're not doing this to make money. We're not doing this to get rich quick. We're doing this to not go poor slowly or quickly, as the case may be with inflation being out of control. But it is nice to know that when Bitcoin hyper-Bitcoinization hits, that we have a big chunk of Satoshis to help secure our family in that new future, in that bright orange future. If Bitcoin hits 1 million this cycle, and Samson Mao and others think it will, but that would be a pretty big pump, although it would only be a 10x from here, basically. Our stack, if we didn't add another Satoshi to it, would have a value of $101,738.59, which is just phenomenal considering, like I've said on numerous occasions, the average American has less than $500 saved up for an emergency. 101,000 is certainly more than that. And if Fidelity is correct and Bitcoin one day achieves that $1 billion per Bitcoin price, something that would easily be believable if we do see hyper-Bitcoinization in our lifetimes, then that stack of sats would have a real-world value of $101,738,590. That would certainly secure you and your family for generations to come, depending on what your heirs are like, right? And that's not too shabby, considering we converted 3,500 US dollars to get there, and we did so at just 20 US dollars a week. Some of this popping, I think, is like really popping, but I'm making P noises right now, like pop, or fa noises, and it's not popping, so I don't know why. First, I thought maybe that popping noise that I was hearing a minute ago was me, but it's this mic, because I'm going pop, Peter Piper, there we go, that one, Peter Piper picked a peck, that was me, so maybe some of it is, but The big pop I was complaining about actually has a drop off in the audio. I can see it on my when I'm recording the audio when it goes to 0 on volume level for just a second as it does it. So I'm going to have to troubleshoot that, but I'm going to wrap this episode up because it is getting late. I've already been ripping for not quite an hour, about 55 minutes already. So that is all I have to cover today. Before I go, please help support the podcast by feeding that algorithm monster. And you can do so by making sure that you're following us on Twitter or X. There we are at BTC Bulletin Pod, like BTC like Bitcoin, Bulletin like this is the Bitcoin Bulletin Podcast, and Pod like podcast. At BTC Bulletin Pod. This is in the show notes as well. You can also help support the podcast and feed that algorithm monster by making sure that you're rating and reviewing this podcast. If the app that you're listening on allows you to rate this podcast, any interaction that you have with this podcast helps boost the podcast in that algorithm, makes it more likely that people will see this podcast when they're searching for Bitcoin content to listen to. In addition to promoting the podcast, though, in the rankings, I also love to hear what you have to say. So please reach out and let me know. Again, you can DM me at BTC Bulletin Pod. I have Twitter open. I check my DMs. I do respond. And if you don't use Twitter, you can always send me a good old-fashioned email. My email is also open right now. That email is bitcoinbulletin@protonmail.com. Again, that's bitcoinbulletin@protonmail.com. Either way, don't forget to follow us next Wednesday and every Wednesday while we grow that stack of Satoshis together. But until that time, keep on stacking those sats, you sexy sat stackers.